make of the financial technology space here. Take SS&C Technologies. That's SS&C for you home gamers. It's a software company that helps financial services providers by giving them the tools they need to automate huge swaths of their business. Everything from back office functions like accounting, reporting, processing, and clearing to front office functions like trading and modeling. Now, SS&C has been a tremendous long-term performer. The stock has more than doubled over the past 5 years. It's rallied nearly 20% for 2018. Much of the recent move came in January when SS&C announced it was acquiring competitor DST Systems for $5.4 billion. Deal that closed last month. Okay, lately the stock has cooled off. The company reported 2 weeks ago, and while the headline numbers were basically in line, management's revenue guidance was viewed as a bit light by some, which led some people to conclude that it might take longer for the company to integrate the DST acquisition. We got to find out about that. But I got to tell you, this company has a great track record, so maybe they deserve the benefit of the doubt, which would mean the recent softness might be a buying opportunity. Let's take a closer look with Bill Stone, the founder, chairman, and CEO of SS&C Technologies. Find out more about how his company's doing, where it's headed. Mr. Stone, welcome to Mad Money. Good to see you, sir.
Thank you.
Thank you. Have a seat. All right, first, people should understand that my old hedge fund was a client of yours.
That's right.
Frankly, every hedge fund I knew. I mean, you own that business, don't you?
Well, we have a big chunk.
Yeah. And now, why is that? Because you got to give us the story. You have a storied history. I mean, you started with $20,000 3 decades ago. There are a lot of people watching who wish that they had been with you throughout. Give us the sense of history of what you've built here.
Well, Jim, like you, right? I've been in this business for a while, and I was lucky enough to work at a broker-dealer for 4 or 5 years and learned a lot about the securities processing business, and was a consultant up at State Street for a while,
right,
and USAA, and founded SS&C in '86. And, we got into the hedge fund business really in '97. We bought a company called Shepherd Brown Systems. In '99, we bought Hedgeware.
Right, that's the one I know everybody uses.
That's exactly right. And so we've built on that. We've done 50 acquisitions and been able to really build a great company with a lot of great people.
How about the DST acquisition? That was a stock I recommended in my last book because I felt that the company was inexpensive. I think you got a great price for it.
We did. It's $5.4 billion, and it's a lot of debt we put on our balance sheet, but interest rates are pretty reasonable today, and we have tremendous cash flow.
I was going to say, you throw off a lot of cash. I mean, one of the questions on the conference call is, what are you going to do with the cash when it starts coming in? And I thought they were premature, but people know all the cash you generate.
That's right, and we've had a great track record of paying down debt.
Right.
We went private with Carlyle in 2005, and, we got up to over 7 times.
Right.
And we paid it all down and then re-upped it with Globop. And then again with Advent, but we've always paid it down very quickly. We're a very focused company.
No, you are. You get some big wins, too. A $380 billion bank?
That's right. We're a very large bank that we're doing all of that CECL, which is a current estimate of credit loss. That's going to be required of all financial institutions in 2020. And a lot of people are looking to move to that kind of a platform, and ours is very automated.
Now, that is something that I would much more be comfortable with you doing it than my own estimating of a credit loss, right? They would like an outsider to measure that. That's
right, and they need to have the right kind of technology to be able to, it's masses of data, right? So you got to be able to slice it and dice it and deliver it in time to make a decision.
At the same time, there are some alternative investment companies, some real estate funds. I, again, want an outsider to give me a price. I don't want the guys who are doing the thing to say, I think it's worth X.
Well, of course, right? And you have to have valuation models that you believe.
Right.
And then you also have to be aware, right? The people that are going to invest in what's called level 3 assets, which are hard to price assets. You got to be aware. You can't get into something that you don't understand.
Are there people who still do their own valuations, and the partners, the investors, the limiteds are willing to accept that?
Well, that's in their private placement memorandum, where that says that we're going to have a pricing committee, and the pricing committee is made up generally of people inside the fund. But the best funds use outsiders to also validate.
Would you recommend to the people who are watching that there should be an outside person who does the valuation if it's something that's not just listed stock prices?
I think that's wise.
Yeah, because I think that there are still many people who don't. You're making these modeling. Is this technological advances? Are you using the kind of equipment we can, or is this just all rocket scientists that you have on staff?
Well, we have some of those rocket scientists, but at the same time, right, it's also common sense, right? It's making sure that the parameters that you put in are reasonable to anybody that's really in the financial markets. You know, if your interest rate parameters are, say, 100 basis points to 20%, that should cover most of the interest rate environment over the last 30 years.
Well, I can tell people that yours is the most trusted company to get the outside valuations, or else we wouldn't have used you. Fair enough. That's Bill Stowe, Chairman and CEO of SS&C Technologies, an amazing company that is what you need to protect yourself and protect your investors. Mad Money's back after the break.
Yeah.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.